anyone can perform in a good market with loads of transactions. It's the good businesses and the resilient ones that perform well in challenging market conditions where transactional volumes are much lower, and it's no different in that sales space. And it's no surprise that some of those portals are facing challenges. Hey everyone, welcome back to another edition of Super Prime UK with your MJ Group Super Prime valuers, myself, Rob Cohen.
And myself, James Wild.
We are back live to give you all of the latest data, intel, and update you what's going on in the fiscal markets with everything to do with finance, lending, and the property market. James, welcome back. How are you doing, and what have you got to tell us today?
Yeah, really good, thanks, Rob. So obviously, the main news at the moment is the base rate has increased by 0.25 increment. Widely anticipated, Rob. I think most of the markets were betting on that. Some of the more pessimistic analysts were banking on a 0.5% rise. Personally, I think for the economy and the housing market, a 0.25% increase it will enable the property market to perform better than that sharper 0.5% rise. Rob, what are your thoughts on the base rate rise, 5.25% now?
Well, you know my thoughts, James. I don't think any further increases are needed. I think the 14 consecutive interest rate rises that we've seen could have stopped at around increase 8 or 9. Bank of England have got their policy and they're using this tool to hammer home a mechanism to try and control the inflation rate, which hopefully is moving in the right direction. The markets maybe a little bit more positive. The markets are betting now that the interest rate will max out at somewhere between 5.5 and 5.75, which means we're really close to the end now of these interest rate hikes, and then we'll see where we go from there, James.
Thanks, Rob. Obviously, Monetary Policy Committee, 9 members, 6 voted on the 0.25% increase, 2 voted 0.5%, and 1 voted alongside what Rob would have voted to keep the interest rate the same. Current food inflation, Rob, 17.3%. That is really one of the driving factors which keeps the base rate rising. It's one of the government's and the Bank of England's only instruments to try and control and dampen the inflation. The Bank of England has said that it expects annual food inflation to fall to around 10% by the end of the year, whilst the UK's prevailing inflation figures did decrease in June, slightly more than anticipated, to 7.9%. Quite interestingly, Rob, the Bank of England is now aligned with the government in anticipating inflation to drop to around 5% by the end of 2023, meaning that the Prime Minister, Rishi Sunak, would meet his publicised target of halving inflation by the end of the year. So I think that does bring some positivity there for the economy, and hopefully enables the base rate, Rob, to peak at maybe 5.5 to 5.75, like you were referring.
Yeah. Let's go back a few shows and let's go back to the last 0.5 point increase that we saw, with inflation still not in a downward trend. I think positively and hopefully that was the peak of negativity and hopefully our rock bottom moment in this economic cycle. And some commentators, and you and I have discussed pre-show, James, that we're looking at a W theory model, which would have been strong 2022, and then suddenly our Liz Truss scenario taking us all the way to the bottom of a W, and then a rebound as the cabinet and the government reshuffled with Sunak with a bit of optimism, and then the inflationary position being out of control and the huge interest rate hikes taken us all the way back down to a few shows previous. And now the question is, where will the turning point be for us to see out this W-shaped model? And that's a time thing, James. We could be very positive, and we like to be positive on this show. That could be a 6 to 9 month period from now, where slowly but surely inflation comes under control, like James says, interest rates hold and eventually turn. And the pessimists out there would probably say it could be anything between 12 and 18 months. But I think we're going to go nice and positive on the back of improved data and news out there that hopefully it's a 6 to 9 month position, and that W will come through and improve conditions will reach the economy and the financial markets and the property market.
Yeah, thanks, Rob. And just how that's impacting on the real estate market and property sectors at the moment. In terms of residential, we're finding that activity, particularly in London, Rob, is a little bit subdued at the moment, both in terms of the stock levels and also the sales levels have sort of plateaued somewhat. Obviously, as we move through August now, typically the summer holidays, it's one of the quieter months in the property market, that along with December. So we're going to have to see how activity progresses until we come through into the autumnal months. On the high street retail, Rob, Wilko is on the brink of collapse, we understand today, threatening around 12,000 jobs. It's got 400 stores. It's sort of the homewares retailer there. More of a sort of occupy a lot of sort of secondary positions on the high streets. But obviously it's sort of just that sort of trend of large franchise stores whereby they're not quite performing, and it's led to a number of stores exiting the high streets. And what we've talked about in the past, Rob, it's that if you can't sell them cheap and stack them high, you've got to have a really strong online sales profile. So in terms of property data, the house price index, Nationwide have released their HPI data, which has shown that the property market has contracted slightly month on month for July 2023. A marginal decrease, Rob, 0.2%, which has edged the annual house price growth to negative 3.8%. This is the weakest outlook we've had from Nationwide data since July 2009, in the period after the credit crunch there. Although it's only moderately lower than the previous month, which was 3.5% annualised contraction in the property market. As a result of the data, the price of a typical home is now going to be 4.5% lower than the peak of the market, which was August 2022, just in that period after the stamp duty holiday. This does suggest that the next data set for August 2023 could be the peak of the house price contraction. However, this will obviously somewhat depend on the property market's performance in the coming months. Despite the statistics from Nationwide, the number of UK transactions in June was 94,690, Rob, somewhat unexpected there, and 9% lower than this time last year, June 2022. And as you mentioned, that was the end of the stamp duty holiday, so a real spike in terms of the data 12 months ago, but it is 28% higher than the previous month in May, according to the latest Her Majesty's Revenue and Customs data.
Yeah, I think, although that seems very strong and performing, James, going back to our W, that would have reflected the top end of the peak of the middle of the W, and now we're going to see the downward trend from that. And obviously transactions and data lag by quite a few months in the UK with HMRC, and so we'll see those numbers come down as the coming months move forward.
Yeah, I think, like you say, Rob, definitely going to be a quieter couple of months in the property market. Furthermore, in terms of the delivery of new homes, both from a national and more modest house builder perspective, developers are somewhat concerned at the moment at the reduced demand for property. And obviously we've seen the end of Help to Buy, which made up a massive chunk of the market, particularly for those first-time buyers. Developers are commentating, Rob, that there are longer selling periods now as well, which could affect their ability in terms of covering construction costs, their development finance, and also their ability to invest in new projects.
As we know, James, the second we go into a hard downturn or slower market, the larger developers land bank or mothball their schemes. They hold out and they sit and they wait until the right moment to return to the market. And, as we've seen this week, Taylor Wimpey's pre-tax profits half year are down nearly 30%. And that's a clear indication of where we sit in the market.
Yeah, won't be the only ones that have been hit by this in terms of delivery of housing and having sort of increased costs and less sales on their books. Despite the market slowing on the whole and transactions being somewhat subdued since that peak of the market on transaction volumes in June 2022, Rightmove has announced a 10% increases in their revenue and a 7% increase on their operating profit for the first half of 2023. The property portal, Rob, they've commented that the increase was driven by higher uptake from estate agents and using the platform's additional features and upgrading subscription packages. Obviously, we did have a slight inroad into the market from some of the online agents, such as Purple Bricks. They continue to struggle and lose the sort of limited market share which they had, and seeing as Rightmove seem to be increasing their market share, I just wonder if their presence in the market, some of the online agents, this might diminish further that pool of agents, and whether they are able to ride out this period, which doesn't suit their model at all. The lower transaction volumes, it doesn't fit in with their model to enable them to trade and meet their thresholds in terms of their business plans.
Having been in business in the industry for 3 decades plus, anyone can perform in a good market with loads of transactions. It's the good businesses and the resilient ones that perform well in challenging market conditions where transactional volumes are much lower, and it's no different in that sales space. It's no surprise that some of those portals are facing challenges. Like to move on to EVA, our European Valuers Alliance. The next Q2 2023 show will be coming out next week for all of you pan-European lovers or investors or lenders. Great intel and data in that, with some great updates on what's happening in that market space. And one of the trends that we noticed, James, from our pan-European friends is the super prime market outperforming the mainstream market, again predominantly with cash buyers and very little lending and debt from banks and institutions. So it's interesting to see how trends across Europe very much follow the trends that we are sharing with everyone on this show.
Yeah, no, that's it. And it's amazing how many of the trends do somewhat overlap country by country. And obviously, the Q2 special is on Turkey, slightly different location, climate in Europe. And we're going to be discussing on a more granular level what real estate markets are performing in Turkey and in particular in Istanbul. So the Premier League returning soon, clubs just racing to get their last bits of transfer dealings completed. I know certainly Man United could do with another couple in through the door. I know you've been following the Women's World Cup as well, so a bit of a shock earlier today, Rob.
Yeah, big shock. Germany out of the World Cup, not progressing beyond the group stage for the first time in the history of the Women's World Cup. And I think that will open up the door. And I'm pretty positive, actually, James, and I'm boldly going to go out there and say football is coming home. And I do think England will win their first Women's World Cup. I think it's going to happen.
Back to back, yeah. European champions and World Cup champions.
Yeah, I'm very confident. And let's hope the next time we have a show, we'll be celebrating a famous victory for the women's team.
Fingers crossed. Let's hope so.
Brilliant, James. Great to be back and great to have you all. And we'll see you all again soon.
Thanks, Rob. Thanks very much, everyone.